Okay, guys. This is the uh, this is US 100 analysis, NAS100 US analysis. As you can see, it is the 1 week time frame. Um, what you need to know, guys, when I'm analyzing the market, I start from a bigger time frame. I use top-down analysis basically from a bigger time frame, which is 1 week time frame, to the lower time frame. I then break the market to the lower time frame where I'll then take a trade. I don't take a trade on a weekly time frame. I take the trade mostly on the 4 hour time frame or 1 week 1 hour time frame most of the time. Depends on the condition of the market. Okay. So what I do on a bigger time frame, first and foremost, I upzoom the market as to look at the market in a bigger picture. That's the first thing. Number two, what I do, I actually identify my current lower lows, my current high highs. This is my current lower lows for the structure. This is my current high highs for the structure. After I identify those two, I then identify the areas when the market reaches those areas, it reverses or it shows certain uh, movement. So that is why you are seeing a lot of resistance and support lines on the chart. It's because I'm identifying all the sensitive areas, guys. So the areas where the market reaches those areas, it then reverses or it shows certain movement. As you can see here, the market showed certain movement here. All those areas, guys, all those areas. When the market reaches those areas, the market reverses. I call those areas zones, guys. Those are the zones. So I identify all those on a bigger time frame, which is 1 week time frame. After um, identify those areas, I then um, identify trend lines. As you can see, this is the trend line, this is the downtrend. So the market, it broke this downtrend line, guys. Right now, the momentum of the market is showing a bullish momentum. Basically, the market is on a bullish momentum. As you can see that the market is actually showing a bullish momentum. Okay, so I identify this bullish trend. Then after that, guys, I go to a lower time frame, which is the daily time frame. I go to the daily time frame. Okay. Okay, this is what I'm seeing on the daily time frame for NAS100. Okay. So what I'm seeing, guys, is that the market is on a bullish momentum, but you cannot just buy. For you to buy, guys, you must analyze the market from a higher time frame, moving further to the lower time frames, so that you will then get a proper entry. Then you enter, then you make the market. So as you can see here, so what I'm seeing right now, the market, uh, this is the first touch, this is the second touch, that's a third touch, this one is the third touch. So a third touch is a 90% rule. Most of the time after the third touch, the market mostly uh, uh, respect the third touch rule. It mostly reverses. So as you can see, we don't know, but guys, we don't know, because currently we won't take any trade. We are going to analyze the market until it shows us the right entry for us to enter. We'll then enter. Currently, this is what you are seeing on a daily time frame. Okay, remember, guys, this is NAS100. Okay, so the market, actually on the daily time frame, what I've analyzed or what I identified was this uptrend line, guys. This uptrend line. That's what I saw on a daily time frame. Remember, you don't have to force trends. You don't have to face anything. If there's nothing you see, there's nothing you see. You then move to another time frame, which is the 4 hour time frame. Okay. So let me just. The only thing I saw on a daily time frame was this uptrend line. I also identified that I also saw that, okay, this one was the first touch, second touch, third touch. So it means that this area is a very it's a confluence zone. It's a confluence zone because there's this resistant line, there is this uptrend line, there's also this uptrend line. So it shows that somehow that this area here, this area here, it is the confluence zone. Okay, so let's go to the 4-hour time frame. Let's go to the 4-hour time frame. Okay, let's go to the 4-hour time frame. Okay, this is the 4-hour time frame. Okay, on the 4-hour time frame, remember guys, you have to identify zones, you have to identify patterns, you have to also identify, you can even take the trade. Okay, this is what happened on the 4-hour time frame. Okay guys, so basically what I identified on the 4-hour time frame was this zone, this sensitive zone, that zone, these zones, and also that zone up there. So I call these zones demand zone and supply zones. So when the market is near the demand zone, should it shows maybe certain reversal, you have to buy. When the market is near the supply zone, should it shows a certain reversal near that zone, you need to sell. So this is okay. This is the demand zone. Look what happened. The market moved to the, it touches this zone, this demand zone. Then after that, the market moved to the top. Okay. Then this is the demand zone. Okay. Look, the market touches this zone again. It moved to the top. It means that somehow this the demand zone. When the market is near the demand zone, you need to buy. When the market is near the supply zone, you need to sell. Okay. This is the supply zone for this market here. So look, the market touched there, it then moved to the bottom side. So meaning that those areas or those zones, when the market is near those zones, you must know that you have to, if it is near the demand zone, you buy. If it is near the supply zone, you sell. If you trade the market like that way, most of the time you'll make the profit. But if when you are analyzing your own market, thinking that it's going to break, it's going to break, it's going to break, you don't have to analyze the market like that. You have to analyze what you are seeing. Analyze what you're seeing on the market. Okay, guys. Okay. I analyzed, basically I identified all those zone on a 4-hour time frame, also the patterns on the 4-hour time frame, as you can see. I then moved to the 1-hour time frame. Oh, this is the 1-hour time frame for NAS100. Okay, 1-hour time frame, I took the decision. Basically, okay, okay, okay. This is the 1-hour time frame. Basically, guys, should the market breaks there, I'll sell them out only if the market breaks here. I'll then sell the market expecting that it's going to go further to the bottom side. But currently the market doesn't show me any sales opportunities. It is actually showing me buys opportunities. Okay. At the end of the day, guys, you don't have to trade what you think, you trade what you see. So what I see is that the market is above the current demand zone. So if the market comes here, it will buy, move to the top. This one is the first TP and this one is the overall TP. Okay, that is the current direction of the market. That is the current direction of the market. So right now we are going to wait we are going to wait until the market comes here. Then after comes there, it's we are going to buy, expecting that the market is going to come to this zone, this supply zone. So we're going to set the market only if it breaks this demand zone. We'll then look for sales opportunities, as you can see. So let me show you the thing on it. Let me show the market structure on a 4-hour time frame so that you will properly see what I'm talking about. Okay. So we are going to sell the market expecting that if it breaks this structure, we are going to sell the market there, expecting that it's coming here, expecting that it's coming to this zone, which is the demand zone. So should the market breaks that this zone here, over here, we are going to sell, expecting that the market is coming here. But as much as the market is still above that demand zone. As much as the market is still above that demand zone, we are actually looking at the buying opportunities here. We're looking at the buying opportunities here, expecting that the market is going to come there. So that's the structure of NAS100. Okay, at the end of the day, guys, let's just go to another pair, which is US30. Okay, as I said, guys, US30, I start analyzing from a bigger time frame, moving to the lower time frame. So I start um, from the weekly time frame, which is a top-down analysis. Okay, so what you do when you go to the bigger time frame, guys, make sure that you firstly outzoom the market. So why outzooming the market is because you want to look at the market in a bigger picture. You then identify your current lower lows, your current highs. You then identify the zones that are very sensitive, or the sensitive zones. When the market reaches those zones, the market reverses. So that is why you are seeing all these um all these multiple resistance and support lines, guys. So after doing that, you then identify the trend. This is the trend that I identify. This is the trend that I identify. I can see that the market breaks the structure here. It's retested the resistance line. Then after that, it moved further to the top. Okay, this is what I've analyzed on a 1 week time frame. Remember, guys, you don't actually take the trade immediately after analyzing on the 1 week time frame. Instead, you have to get a proper entry or in a lower time frame. So you go to lower time frame where you'll then get a proper entry, then you take the trade. So let's go to daily time frame, guys. Let's go to daily time frame. Okay, this is the daily time frame. Okay, so in the daily time frame, guys, what I identified was this downtrend, this downtrend, this downtrend. Okay, I can see that, okay, basically the market broke this downtrend. It then moved to the top. Okay, so as I'm saying, guys, you don't have to take a decision like so early. Instead, you have to break the market completely, like from the bigger time frame moving to the lower time frame. Then from there you can take the trade, because you know, the how the market is moving. How was it moving from a bigger time frame? How is it moving from, like on a current time frame, which is the lower time frame? Depends which time frame do you want, do you prefer to take the trade on, like either daily time frame sometimes, or hourly time frame, or uh, 4 hour, 1 hour, M30, M50, depends. Even M5, some people are even trading on M5. Depends on your strategy as a trader, which one do you prefer. Okay, guys, so then this is what I identified on the daily time frame. I identified this trend line there. I then moved to the 4 hour time frame. Okay, I then moved to the 4 hour time frame. This is my 4 hour time frame. Okay, on the 4 hour time frame, there are a lot of things that the market usually the market is showing a lot of things. You can even take the trade on the 4 hour time frame. Most of people does that. Depends. Okay, so what I'm seeing on the 4 hour time frame, as you can see, I'm seeing that I actually identify zones, the demand zones and the supply zone, as I said. So this is the zone that I'm talking about. 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 So all these zones, I identify them mostly on a 4 hour time frame. Also, some certain patterns, identify some patterns on a 4 hour time frame. As you can see here, I'm actually seeing this pattern is so-called a double top. This is a double bottom, I mean. So it's a double bottom. So identify a double bottom. I can see that on a 4 hour time frame, there was a double top. Remember, if there's a double bottom, the market is actually going to buy according to pattern. So this pattern it actually shows uh, buying opportunities. Okay, so guys, I identified that what I've identified on a 4 hour time frame is